He was the professional hockey player who spent time bouncing around the minors in North America. When he realized a 20-year career in the NHL wasn't going to happen, he started trading. Now the CEO of his own prop firm, James provides his live analysis on why he believes the NASDAQ trend isn't over, why he's shorting the long end of the bond market, and discusses the asset class he calls an awesome opportunity.
James Sixsmith. James, good morning. Take Profit Trader. How you doing, my brother?
Great. Thank you, Anthony. Nice to be on. I've watched you for many years. You don't know me, but I've seen you a lot.
Well, it's great to have you here today, James. First time having you on the show. You are the founder and CEO of Take Profit Trader, and you got also a very interesting background. I think maybe we just start there real quick.
Happy to do it. I always tell people in my past life, I was a professional hockey player, and that's when I started trading. Just to shorten the story, I played for 4 years in college and was basically like bouncing around in the minors for a couple of years in North America. And I went to Europe to play because typically the top leagues in Europe start plucking the guys that are kind of borderline NHL, at least in hockey. Same thing happens in baseball and basketball too. But so the top leagues start plucking those guys, and I was one of those guys. So my trading story began there because when I got to Germany, I signed with the Cologne Sharks in Cologne, Germany. And I got there and it was the first time in my life, the realization that I wasn't going to have a 20-year career in the NHL. And it was like, oh no, what am I going to do? So I started trading. And the great thing about this, as any trader knows, is I didn't have to rely on trading income. Like I had the best scenario. I played professional sport. I had a lot of time on my hands in between practices and stuff where I could learn a craft and I wasn't forced to like make income from it. So I started trading, really turned the corner when I had somebody back me. That's the whole thing behind prop. And that's how I started, Take Profit Trader many years down the path of being a proprietary, let's call it online retail prop firm instead of the traditional SMBs or something like that where you're brick and mortar. So long story short, my failure in hockey propelled me in trading. And we've been doing this ever since. And a lot of different things inside that too, from short-term scalping. I don't do that stuff anymore. I think that's harder than ever to do. Some people can still do it very well. I'm not smart enough for that. So more of like, listening to Zach, that's the kind of things I think about on a day-to-day basis now.
Got it. I love it. Man, that transition from sports to trading, it just makes sense, man. It's the mindset, it's the physicality of it, but it's the mental physicality of when you go in and trade. So I love it and looking forward to seeing more from you and what you guys are doing with Take Profit. But we got a Tuesday morning here today. Let's maybe take a look at the charts. Let's see what you're looking at coming into today's open.
On an intraday basis, I'm basically managing risk for Take Profit Trader. I mean, primarily our guys are trading the NASDAQ futures. That's all they're trading. When I say majority, it's north of 75%. So, mainly I'm managing risk on something like that. On a big picture, I'm looking at the rates and stuff. And I use something simple like volume profile. I just want to see where the market is compared to where it's been. When you guys were talking about the back end of the curve today, I almost started chuckling because it's what I've been looking at here because I think it's a big driver of this market. I don't know why anybody would want to own like the long end. I certainly don't. I'm short the long end, but I just pulled this up. This is a 4-hour chart. And, obviously you're not intraday trading if you're looking at a 4-hour chart. But again, I just want to see where the balance is. And this is really how I traded too. When I was trading intraday, would pull up something like the NQ and looking at, throw things, simple things. I like to keep it simple. I think most traders are better off simple and throw a VWAP on there and also back away from the market. Anthony, I think a lot of traders, what I've seen, I've never seen, I shouldn't say never, but you don't see traders typically getting closer to the market and doing better. So I'm always saying, guys, like if you back away and size down, you typically do better. I don't look at anything really under a 15-minute technically that's how I look at the market. In terms of where the market's going, I just think it's hard. Like everything is NBD, no big deal for the market, and BTFD is still in. Like it's hard to go against the NQ, right? Like no news drags it down. It's been years and years of people saying, oh, it's overvalued, it's overvalued. It's like when we're talking about AI and tech, it's like, how do you really value a company using like traditional methods? It's hard. I think everybody's talking about the same things. It's like the NQ and ES, they're just going up and up and up and up. But I don't think people should try to fight it, at least right now. I mean, that's the obvious answer.
Yeah, I mean, fighting these trends has been really difficult, to say the least. I took a short last week. I bought some puts, and literally I don't think it was my way for maybe more than right after I bought it. And I want to go back to the UB just for a second, because we don't talk really ultra bonds on here. We've got people forget that there's a lot of products out there. We talk about ZB, but then UB is the ultra bonds. You've got the 10-year, and then you've got the ultras for those as well. Why are you looking at the UB? Curious about the ultras you buy.
Yeah, I work with a macro trader that was at Millennium and a couple big shops. And when she teaches me, we talk macro stuff. She prefers the UB. So there's no real reason. I mean, it's still like longer term duration. So I just trade the UB just because, I guess. And in fact, like I'm in a steepener right now. I think I own some 5-year in short UB. Again, just because I think that with all of the stuff coming out from Besant talking about they're trying to, they're buying the short-term paper, want the short-term paper bought. I don't know how with the deficit, with the new bill and stuff. Again, anybody could be owning or want to own the long end, but I mean, obviously people do. I know it rallied the other day, but I'm basically like a long-term short in the UB here. And you see it's trading right at basically the point of control for the last, since April right now. So it's had some times where it does very, very well, but when I'm talking about UB or any kind of long-term duration, I don't want to own it personally.
Yeah, some fun facts for everybody out there to understand why the ultras even came into play versus the traditional 10-year and 30-year. It's because when you look at a 10-year and 30-year bond on the future side, they're not as close to that total duration as a future. So when you're marking them against like a cash market, so if you look at the 10-year bond versus the ultra 10s, the ultras are actually closer to a representation of that actual time span of that bond. So like when you look at a UB is a better representation of the full duration of the 30-year bond versus the ZB. It's kind of nerdy, but that's the reason why that the UB came out. So I can understand if you're a macro person, if you want as close to what you can for that duration, for that bond and the futures markets, you want the UB just like you'd want the ultra 10s. It's the same scenario for that. So just kind of fun fact for everybody out there. It's interesting. Like I said, nobody really comes on here and talks UB, and I'm glad you did because it sparked some conversation on it. I'm actually going to be talking about a lot more in the show. You got my juices going because I remember when these products came out. And again, I think it's interesting. You or your would take profit. And I think personally, a lot of these products should be some products that traders should be looking at more so than just traditional products that they come into this business looking at, which is S&P and NASDAQ. And it seems like the whole world right now of young traders is coming in mostly trading micro NASDAQ seems to be just like the choice of product because of volatility. And I get it, but a lot of these other products might fit people's personalities a lot better. And they do have a backdrop of a macro theme that will feed into a shorter term execution, because if you understand what's happening in the macro, it will make a little bit more sense sometimes during the short term, is that like the Fed is on hold, they're not doing anything right now, it's a two-way tape. And you also know that some key levels, if they get broken to the downside, you do get some cause for concern, and you could have some moves that could really ultimately have some legs in those markets versus like where the S&P and NASDAQ right now are, it's tough all-time highs. I'm just curious, in your company, do you see people trading these other products besides S&P and NASDAQ?
Not enough, in my opinion, for the same reasons that you're talking about. If you tell me how many basis points the NASDAQ is up or down, I can tell you without even looking at my screens how the traders are doing, right? Because buying every dip has been in vogue for 10 years. I mean, it's what's made money. So they typically want to do that. But I think that traders should trade more of it. I mean, I hesitate to tell people what to trade because, if I tell somebody, hey, go trade crude oil, you can get your face ripped off there, right? Like I had the crude oil up personally, Anthony. Like I love energy. I know you guys were just talking about it with Zach. I think that it's a big part of like, how are we going to power all of this AI movement? I think crude is underpriced. So I'm looking at levels to buy these dips to hold on to it for a bit. But I don't see, to answer your question, I guess directly, I don't see a whole lot of diversity diversification in product with our traders. Majority, they're trading the NASDAQ because it's volatile and they can make some money trading it. So that's what they trade. Like almost nobody's trading currencies, which I think the whole thing with the dollar, I mean, the currency futures market is an awesome opportunity for some people if you understand what's going on over there, more so than ever because of this like dollar debasement or whatever you want to call it.
James, let's do our part and let's get people into other products and let's talk about them more and more. I agree with you. You know, I mean, of course, I'm blessed to have Tracy in here, Shy Girl, one of the best in the business when it comes to understanding what's happening in oil market. But even with having her here, I look at this market and I scratch my head and I go, can't hold a rally. It's got a lot of reasons to hold rallies. You had all this geopolitical stuff earlier with Iran. Market kind of just continues to brush it off. It's now come off significantly off the highs. It's been a market that is just finding its way in the middle a lot. In the middle, what do they say? Don't diddle in the middle. I think that's what they say. And now we're back in this area. What are you seeing this morning in crude oil?
Really, I was looking at it to try to start another leg down, on that 4 hour that we were just looking at and run into some volume underneath us and really try to like load up there because I'm looking at more of, weekly swings and stuff like that. When I'm looking at intraday, it's hard because crude oil, it's thin, right? Especially for our traders too, Anthony. I think that the reason that they don't trade it is they want to load up on contracts and these quick moves in crude just wipe them right out, right? So if I were drawing something over today, to me, it looks pretty balanced. I mean, we're back in the middle for the session. This is that area you were just talking about where it's a lot of noise right here, even for just the day. You can see that we're heading lower. It looks like we're making lower lows and maybe a continuation of that big move that I think was a geopolitical event. I forget what it was. So I wouldn't really want to be buying, especially here right now today. This probably wouldn't be my location to be buying.
Yeah, I mean, I like how simple you keep it. You just look at it, when you're in a belly of a market that's in the belly of a bigger range, why come in and do too much? Crude oil has not been the most attractive market for day traders just because it's really not been that clean of a trade. And like you said, it's just been, you got a ripper higher and then a ripper lower, a headline driver, and it's not sustaining any of these moves. You got to keep your toe in and out of the crude oil market. James, we got to talk NASDAQ if all of our people are watching NASDAQ. So maybe at some point we get to the NASDAQ, but if there's anything else you want to go over before pre-market, let's take a peek.
No, I mean, we can pull the NASDAQ up. The only thing I'm looking at, we were talking about emerging markets too, is in the currencies, which I think we're going to do more of a job at Take Profit to show people in this environment that currency futures are an excellent way to look at the market. I would say look at the markets, but there's some opportunities there, like the real being one with the positive carry. Everybody knows what happens with the Japanese yen. I like the real because of the positive carry, but that's not always a smooth trade either. It's an emerging market. That's a little bit more complex. Probably don't have enough time to talk about that here. So if we're looking at the NASDAQ, let me pull up a shorter term chart. And this is hard, Anthony, too, because we got that news, I think today, Besson said, we're not going to fire Powell, which has just been like a flip flop between him and Trump. And any positive news, the market rallies. Any negative news in the NASDAQ, it just sits there. Right? So I don't know how, when you look at a NASDAQ chart, I mean, technically speaking, for me, the way I look at it, Anthony, a lot of volume on the highs here, point of control near the high for the day. And this is good. This is the Globex session, right? So going all the way back to last night, maybe it needs to be up a little bit more. And whenever I see a market that's trending higher and it continues to print with a lot of volume on the highs, to me, technically, it doesn't look like it's done. So I wouldn't be shorting the NASDAQ this morning here. If anything, I'd be buying it and maybe adding small size because we're near the highs for the session. And then, if it dips on the open, buy a little bit more, but not going full size because I don't like being full size intraday at the highs, even though, again, it's work. So I can't say that the people that are doing it are wrong.
You mentioned currencies. Maybe we look at the 6E because the dollar continues to be a story. We got the euro this morning, which was up, is now turned down. You watch the euro much?
I don't watch the euro a lot. I am short the pound.
Let's look at pound then.
These are more like macro plays too, Anthony. It's not necessarily like an intraday play. I think the only currency that I think that should be weaker than the dollar is the pound. And this is just a feel. I don't know. My mentor too has got a lot of reasons where macro speaking that we want to be short the pound. But if we're looking at an intraday chart, again, I'm not looking at it like this. I do think, again, there's opportunities for our traders to take profit because of the moves in the dollar, that a lot of this stuff is a lot more attractive than usual, where it wasn't moving nearly as much as it is now. but we're looking at this today. This looks like it's just range bound. It seems like when you come in and you're looking for a direction, everything is in the middle. I like our guys to trade from the outside in, or if you want to be long or short the pound, you want to be selling those rallies and buying the dips below the majority of the volume, not in the belly. Like we're sitting right here in the middle of the belly today. And that's a very simple way to trade, is to stay out of the middle and trade more on the edges. And that's my bread and butter. I cut my teeth on the S&P trading like that. And that's how I look at everything technically if I'm not looking at it through a macro lens.
Got it, James. We're out of time for today. Really great to get a chance to get to know you a little bit. I can't wait to have you back on the show, James.
Thank you, Anthony. This was awesome. I appreciate you giving me the platform.
This presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader, LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.